Hello, everybody. Thanks for tuning back in to Trading with Zeph. Today, January 3rd, we have two news events. We have FOMC at 2 o'clock, and we also had jobless claims that came out at 10. So those were the two news events for today, but I just want to go over the two trades that I took. It's only 11 o'clock, but ending it early because I have a rule that if I do a total of two trades and I win both, I stop. If I lose a trade and I do another trade and I lose that one, take a 15-minute break and then lose a third, then I close it for the day. So that's kind of how I operate. Try to get in, try to get out as soon as possible. But that's where I'm at for today. Two trades. I marked up a few that I saw. One in a pre-market, but I basically got here right when market opened, so I think I was like 10 minutes late. I'll go into these trades real quick. I just want to show you the daily chart, and we are right now testing the previous support at that 47.50 mark, and that's also a contextual reason why I took the last trade of the day, so stay tuned for that, because longer time frames, you should always be looking at it. But that's the daily chart. And let's get into the 2000 tick chart now. So starting off pre-market, we have a huge sell-off here from yesterday's kind of choppy zone. Pretty sideways yesterday. Go ahead and check out the previous video, but it just chopped around. Today we had more of a trend, a lot of a bearish trend today. We have I'll just go over a few of these real quick, ones that are prominently worth mentioning here. We have a second entry short right here. This is pre-market. If you trade that, I do not, depending on how price is moving, how price action looks. But this one looked pretty darn good, especially with this downward move. So a nice second entry short there. We chop around for opening because we're expecting jobless claims at 10. And boom, there it is. You can see price starts moving here. I don't trade any of this, and it's right into this previous day's low. So I'm just watching. You have a first entry long, second entry long, higher low, but the signal bar is not really that good. It's below EMA, and you have all this choppiness to the side, so you don't know that this uptrend is going to happen. This is where I took my first trade, and sorry about that. This is where I took my first trade. You have a first entry short pullback, and you can see one tick below at 47.67. It's going to be a second entry short. So I enter, and I realize that this is basically still a trading range, so the probability of us just breaking up and going higher, especially with the context of the bearish day, is more than likely to at least test the EMA again or go back for at least my scalp. And sure enough, it happens right away with the automated system. Very useful. If you're not trading with one already, highly recommend it. But yeah, so one tick below, get filled at the 47.66. And then my runner gets immediately, market's just super efficient, comes right back, stops me out. Even though this would have been like a huge runner. But it is what it is. Sometimes you get them, sometimes you don't. Now, hypothetically, you could just leave your runner's stop loss all the way above instead of break even, or a few ticks more upwards, but then you basically lose your scalp. So don't really like that risk to reward ratio. Then we just chop around. I see this first entry short, second entry short. This bar you might go short on. It's definitely not too bad. We'll make this one black. Really low risk was at 4 ticks. 4 ticks. So this one's actually really not bad. I almost would consider this a red arrow. It's just above EMA, so I don't know. And then especially with all this, I wasn't really liking it. And then you get a lower high, and I was hesitant to take this, and I probably should have. This is probably a mistake by myself. Confirming this second entry, you get a lower high here with a nice bearish signal bar, and you do have room to the downside. I just didn't see much room, and I was right. There wasn't much room, but you did have room for a point. So I think I should have taken this one, so that's a mistake by me. And then I wanted to go over this real quick with you. You have a 1-2 triple test. Now, yes, you're trading in a bearish trend, but it's a good signal bar. And this seems like a decent trade. And sure enough, if you were to enter at one tick above at 47.53.75, you miss it by one tick. Now, I still think this is a good trade. I don't think this is a bad trade. I'm sure there's an argument to be made. I still see this as like a triple test, good signal bar, double bottom matching candles, 1, 2, 3. Like you have a lot of support here. With room back, you just miss it by a tick. So what you can do to reduce risk is what I want to teach is that just trail your stop one tick below. So you're going to enter here at 75. So now your stop would be, instead of underneath the signal bar that you enter on, just move it one tick below or to right at the bottom of 75. Because if price goes back down, the probability of it going down is really high to break the new lows instead of reversing and finally going right back up. So that's something you can do to mitigate risk to help your average, which I found is repeatable and helps with reducing risk for risk management. This is where my second trade comes in. And I see this. So I see this final flag kind of formation, bearish trend down, break, new low. There's probably a trend channel here if you want to draw it. I can kind of just see it. You have a huge hoagie here. You have this bars inside, 1, 2, 3, 4. 4 bars inside, breaks down, turns up. This gives me context that you have basically a 2B pattern and a hoagie pattern, and that what might happen is we get at least a test back up to the highs of this range of this hoagie. Tops at 47.50, and especially when you're also at a 47.50, as well as if you turned in and you're still here, the daily chart you have at the 47.50 mark, 47.45 range around there, about a 10-point range from somewhere around here. We're testing the low, so there's support. There's probably buyers going to come in, so you have a lot of reasons to expect a slight move to the upside, at least very shortly, temporarily. The probability is there for you. I then see first entry long, second entry long. I see one tick above is at 47.48.50, is only right under my 2 points, so this is good risk for me. It's not more than 2 points, and I also see a higher low. So yeah, I think bears were expecting low. I think this is the first signal here on this bar that we have this 2B pattern of a reversal. And then the context of everything meeting it is why I took it. First entry long, second entry long. And I get my 1 point. And at this point, I'm, have my runner. And I watch this bar form. I watch this bar form. Once these two bars form, I realize that the bullish sentiment is out. And my initial analysis of it going back to the top of the range of this initial hoagie pattern is correct. And we might reverse again. So I trail my stop instead of 1 tick to break even plus to cover the commission. I just trail it up 3 ticks because I know, again, as I just taught, back at this triple test, the probability of if it going below this previous candle's low, it'll probably test back down. It's just how price moves. This is a skill, this is a language, and once you watch it for as long as I have, you kind of realize sometimes what will happen in the short term. Sure enough, I was correct, comes right back down, would have gotten stopped out. And that's trailing risk. And then sure enough, it explodes up. So I really like this. This is probably a really good learning video. I hope you guys tune in and actually just understand like the context of how much you can get from watching the market and reading each price pattern forming. And your first initial, I'm going to just recap this real quick. Your first initial thing was the hoagie, your 2B pattern, break down, break up, higher low, second entry long, and then you also now technically have a first entry short, second entry short, fail. So I'm going to mark this one as well for a really good trade. And it would have exploded up. And that's how you be patient. That's how you trade Pat's price action system, as I'm learning day by day. Patience is key, and context is the name of the game. So those what I saw for today. I have my 2 trades in, and I'm pretty proud of the 4 trades I've taken so far for this new year. I think all of them are very well executed, and I'm going to try to continue with the proper behavior. This video is about 10 minutes now. Hope you guys traded well, and watch that daily chart. Watch where the important zones are. You'll see price aggregate to them, and you'll see how they give you great context into taking trades that you can be confident in. And yeah, hope you guys enjoyed the video. I know this one's a little bit of a soapbox video, but starting the year off good, and let's try to get this up to 20 trades and continue on with the 1 point multiple contracts and fully trade how Mac trades. Alrighty, hope you guys enjoyed. See you guys next time.